What's going on, guys? Hope you're having an absolutely fantastic day. So today I wanted to talk about why I think Apple won't be a terrific investment in the next 10 years, right? So in the past 20 years, you can see nothing to complain about. Apple's up 418x your money, right? So 41,800%, right? So I don't think there's anything to complain about that. In fact, some people would say this is a great performance, right? So what am I talking about? So today I want to focus on the future, right? Because there's no importance when it comes to stocks when we look at the past, right? Because past performance obviously does not indicate future performance, right? So just a quick walk through the video. It'll be three reasons why I think Apple is a bad investment and two scenarios where I can find that Apple will be a good investment, right? And to put in some perspective, I don't think the company is a horrible company or anything. I just think the company has gotten a bit too large for its own good, and that's always a good problem to have, right? And secondly, I also want to say that I'm speaking from the perspective of an average Joe, right? So yeah, obviously none of this is financial advice, and let's get into the video, right? So let's start with the company and the stock, right? So the company obviously is a fantastic company printing money, but what about the stock, right? I don't think, in my opinion, I'm more talking about the stock is not so good rather than the company is not good, right, in this video. So the first question we should ask ourselves is why are we investing, right? So if you're like me, you're investing because you need capital appreciation to eventually retire or do whatever we need to do, right? So if you're saying I make $10 million every month or I make $10 million every year, then yeah, I'm sure Apple is a good investment for you because you're not really looking to appreciate your capital, right? You're just looking to make sure your capital doesn't depreciate, right? So let's start with reason number one, which is market cap, right? You can see that Apple is sitting at a 2.88 trillion market cap as of today. So when we look at buying stocks, right, we should look at it as buying the whole company, right? Instead of buying one share. Oh, Apple is so cheap, it's $100 per share or something like that, right? So you look at the whole company instead of just the stock, right? And I think you can see from this that we are not going to, double or triple our money anytime soon with Apple, right? Because to double or triple your money, basically, this has to go from 2.88 trillion to let's say to 10x your money, it has to go to 28 trillion, which is bigger than the current GDP of the US, right? And is quarter of the total market cap of all these commodities, crypto, and also stocks, right? So I don't think that's very feasible. So let's think, okay, how can we 2x our money, right? And in the next 10 years, if you 2x your money with Apple, that's fantastic for you if you have already a large nest egg, right? But for most people, I don't think we have such a large nest egg that we can afford to just double our money in the next 15 years or something like that, right? So that's reason number one. So reason number two is obviously valuation, right? So if we look at valuation, you can see that Apple is currently trading at a 29.27 PE ratio. And this is one of the slowest periods that Apple has ever been growing, right? So if we take a look at the period of like 2008, somewhere around here to 2015, which is right around where Warren Buffett bought it, right? So you can see that the stock slowly appreciated. Okay, 5x in 6 years, that's pretty good performance. But what I want to highlight is that at 2008, 2009, right, the growth prospects for this company were still much, much larger, right? And I think they were trading at a PE ratio of 10, right? So currently, triple the PE ratio, and at that time, growth was around 20 or 30%. So currently, growth is around, I would say, at most 6 to 10%, right? And inflation is at 7%. So just try to piece those things together, right? So point number two is that the valuation is quite stretched, right? Because everyone knows that Apple is a good investment. This company will just continue to print money. So now they've assigned it a 30 PE ratio, right? And now the question is, can it outgrow this valuation, right? We'll take a look at the numbers in a bit. So I have actually a discounted cash flow model for you guys to see. So if you do enjoy the effort I'm putting into this video, do help me smash up the like button, hit subscribe, and also hit the bell button, right? So reason number three is growth and also your time horizon, right? So if you have a 10-year time horizon, obviously you shouldn't be investing in Apple stock, right? Especially if you have, like, let's say 100,000, and some people might say, wow, 100,000, double my money in 10 years, that's a lot, right? But I think we have come to the point where maybe 100,000 or 200,000 is not enough to retire on, right? Even maybe 1 million is not enough to retire on, right? Depending on your lifestyle. So we can see that most of the growth that's been in Apple stock is actually been stock buyback, right? So we can see this is like a prime example of how powerful stock buybacks can be, right? You can see that ever since 2015 or something like that, 2017, the stock buybacks have really been kicking into place and making Warren Buffett a lot of money, right? So we can see that the growth is not coming from actual business activity, rather financial engineering. So there's no problem with that, right? But there's a limit on how much you can do that, because you're buying your company stock at a 30 PE. It's quite expensive, right? Compared to if it today is a 10 PE, I would say that I think Apple stock can continue to buy back their stock for the next 20 years, right? If it stays at the 10 PE, and it will create a lot of shareholder value, right? But at the 30 PE, I think they're actually destroying shareholder value, right? But the question now begins, where else do they put the money, right? So do they put it in dividends? I don't think they want dividends, because there's taxes, and then it only leaves acquisitions, which I don't think they can acquire anyone at the moment also that fits their company, right? And is big enough to actually make a difference, right? So next, let's take a look at the numbers, right? And here I have a discounted cash flow model. So for my normal case, I think they grow 8% in the next 5 years, and in the next 5 to 10 years, they only grow 6%. In the best case, they will grow 10%, and in the next 5 to 10 years, 7%. And I use a 10% discount rate for all of them. So this is the worst case, is that they only grow 5% in the next 5 years, and also 3% in the next 5 to 10 years, right? So I think my views on this company is more on the pessimistic side. So you can see that this is AMD analysis, but actually it's Apple, right? The numbers are Apple numbers, right? So you can see that the terminal multiple I put in the normal case will be 25. In the best case will be 30, which is where we're at right now, right? And in the worst case will be 20, right? So I don't think it'll ever trade at a 10 PE ratio or 15 PE ratio anymore, considering like this is a company where everyone will really want to buy the moment it has a slight correction, right? So after all my numbers, you can come up with 1.7 trillion in market cap, right? So in my calculations, it has about a 30 to 40% downside from the current price, right? So now the next question is, why isn't Warren Buffett selling, right? So we can see when it comes to Berkshire, Apple stock is actually Berkshire's biggest position, right? So it's about a $31 billion cost basis, or they bought it about $35 per share. So they have a gain of $120 billion, right? So making it Warren Buffett's biggest score, right, basically. And why isn't he selling? So I believe there's a 30% tax in the US, right? So basically he will lose about $30 billion worth of capital, right, if he sells it, right? So that is something to think about, right? And also the second, I think, more important thing is, if he sold it, where would he deploy the money? So I think there's only about 8 companies that you can deploy $100 billion into, right? And I think most of them are out of Warren Buffett's circle of competence, right? Look at Microsoft, look at Saudi Aramco. Okay, maybe Saudi Aramco is a possible one. Look at Google, look at Amazon. I don't think any of these companies are really fitting for Warren Buffett's investment style, right? So if he sold the position, where would he park the money, right? And I think the answer to that is he doesn't know, and that's the reason why he hasn't parked the money yet, right? So I'm sure if he has some opportunity to take a $100 billion company private, he would gladly sell this Apple position and take the company public if he thinks that there's a better growth prospect, right? Because if you know Warren Buffett, he doesn't get married to his investments, right? So next thing I want to talk about is actually the silver lining, right? Because all these negative things I said, there's actually a lot of positive things for Apple stock as well, right? So if you can look at Apple, basically their services, right, it's been growing at a record rate, right? So I think they're still growing at double digit, like the app stores and all the other things, right? Especially all the new gadgets and all the Apple Watch, the AirPods and all that, right? So I think that still represents a tremendous growth opportunity, right? And especially those new things that they can invest in, right? So you heard of Apple Car coming or whatever new things they have, right? So and lastly, they can also still acquire other companies, right? But I think it's quite hard to acquire things because most things you'll get like oh, your monopoly kind of feedback, right? So, but the last thing is buyback shares, which is more financial engineering. Not really sure whether it's creating or destroying shareholder value at a PE of 30, right? So, what's my conclusion? My conclusion is that for the average Joe investor like me and you, Apple is not really a good investment because we need to look for capital appreciation. But for people that are making a lot of money, or like Warren Buffett, he needs a place to park a shitload of money. Basically, it'll be a great investment, right? Because basically, there's no other companies as great as Apple that can park so much money and also guarantee so much financial security, right? So yeah, if you want to park cash, definitely Apple stock is looking like some place to park your cash, right? Even though I have a projection of 30 or 40% downside, it can always be wrong, right? Because my projections are maybe on the pessimistic view, right? But if you want to park money, Apple is a great place. If you want capital appreciation, I don't think Apple is the place you should be looking at, right? Because the market cap is already huge, as I mentioned. So any further growth or whatever projects they have, the impact will be quite small, right? Imagine if they launch another Apple product, the sales are 200 billion for the next 10 years, for example. It will only be a very small impact on their stock price and also their company fundamentals, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and hit the bell button. So if you did enjoy this video, I'm sure you enjoyed some of the other videos on this end screen. And with that being said, hope you have a fantastic day ahead and peace out.